and gentlemen, welcome back for our panel discussions. I would like to inform all delegates that this workshop is being live streamed on the Central Bank of Seychelles YouTube channel. The main theme for today is building partnerships and developing fintech ecosystem. Our first panel will be tackling the subject of developing a fintech ecosystem, fostering partnerships between regulators, banks, fintech companies, and shareholders. The panelists will be addressing the challenges that entrepreneurs face to roll out their fintech solution to the market, highlighting the factors that either promote or discourage the use of fintech in the business environment. The first panel discussion will be moderated by Ms. Shamista Apaya, the Senior Financial Sector Specialist from the World Bank Group. Ms. Apaya, the stage is yours.
So thank you everyone for being here today, and obviously to the Seychelles government for inviting us here. Just a quick introduction on myself. So as Cyril said, I'm with the World Bank working with the Financial Inclusion, Access and Infrastructure team, where we work on things that are external focused. So how do we create policy and enabling environments for fintech? But we also work on things that are internal. So how do we sort of bring governments up on e-government and things like that? But what's actually most interesting, and the topic of the panel and the session as a whole today, is how does the ecostructure work as a whole? Like, what are the partnerships between banks, fintech players, other incumbents in the institution, regulators? Do regulators indeed play a role, and what should that role be? And to help us draw out some of the nuances of this conversation, I have with me some great panelists, who I will briefly introduce. First, on my left, we have Ken Kogel. He's from the Dubai Financial Services Authority, where he's an associate director in operationals and technology risk supervision. Then we have Mr. Vimal Kumar, who is the CEO of Retail and Business Banking of Africa Operations of ABSA. We have Mr. Henry Kagame, who's the digital director for digital solutions for Visa in East Africa. We have Mr. Cyril Bonalame, who is the Councillor of the Seychelles Chamber of Commerce and Industry. And lastly, doesn't need an introduction, our keynote speaker, Nectarios. So we're running a little bit late, as I'm sure you've all noticed. So I'm going to try and keep the panel short and try and bring it under 15 minutes. So to start off with, I'm sure you're more interested in hearing my panelists speak than me. So I'm going to ask Ken to start us off with telling us a little bit more about the environment, how they have actually engaged with other firms and with external stakeholders in this area, and some of the lessons that he's learned from it. Thank you, Ken.
Okay, there'll be a slide in just a moment, so we can get that up. Okay. Can we click to the next slide? Yeah, back one step. So first, what I'll go through is explain to you the ecosystem that we've set up in the DIFC. So I'm with the Dubai Financial Services Authority. We're the regulator for the Dubai International Financial Center. Without going into too much depth, it's a free zone that sits within Dubai. Dubai is one of 7 emirates that make up the UAE. So there's a much broader, it's a much bigger jurisdiction than what we oversee, but much of the fintech that's going on in the UAE is coming through our center. And the way we've addressed this, how we've come about the engagement, there's 2 pillars to the center. There's the business development side, then there's the regulatory side. And on the business development side, we have what's called the DIFC Hive. And the Hive is what it sounds like. It's these spaces that Nectarios had talked about earlier. It's got colorful couches and bean bags, and it's made to look like a very fun place to work. It's a co-working space. But within that space, the way they've kept it from just being colorful couches is they host seminars and events, and it's about engagement between existing industry players and SME fintechs that come in. And they do this through two programs. There's an accelerator program and a startup bootcamp program. And they're effectively the same programs, slight differences. Both involve connecting fintechs to industry participants. The accelerator is mostly about this mentorship, connecting them, and the startup bootcamp is about the same thing, but it also provides a funding element to the startups. On the other pillar, on the regulatory side, we have our sandbox program, and the sandbox program, we'll talk a bit more about that in a later session. They're all a little bit different, but I'll go into more details on ours. We also have recognized that it's not just about engaging fintechs within our jurisdiction, but a lot of the fintech development, and we talk about payment systems, that's cross-border activity. So it's not an insular project to be able to develop an ecosystem within your borders, and we did hear that in earlier presentations, that you have to look beyond. It's an international engagement. The GFIN is the Global Financial Innovation Network, and it was started by the FCA, and we're one of the founding members with them. That's about engaging regulators across border. And it's about getting regulators across border to work with fintechs and at the moment, mostly regtechs at the same time to facilitate the cross-border activity and development. Those are formal programs we have. More informally, we are developing programs for engagement with regtechs. And along that, we're looking at our own subtech programs. So rather than trying to design all the subtech ourselves, we are looking at regtechs that we can work with and do proofs of concept to develop out AI in media monitoring, for example. Identify areas where there's material events that are occurring. More monitoring on behavioral aspects. We're also looking at doing that alongside with certain institutions that are looking to implement those types of programs, and around machine-readable rules that can facilitate cross-border compliance management. So all of these programs require a collaboration and I say from our perspective, more of an engagement between us and industry. So it's certainly not things that we can develop on our own. We do have to engage with the industry to understand what the industry needs, what's developing out there. Not so much are we concerned necessarily about what works. We'll let the industry sort out what works, but we want to make sure that what's developing, what risk is it going to pose to our objectives, our regulatory objectives, and is there anything that's developing that we can use ourselves to develop out our own supervisory programs.
Is that on? Yeah. Vimal, if we could go to you, and if you can tell us a little bit about how ABSA thinks about collaboration.
Good morning, everybody, and thanks for having me here. I'm really excited. It's not every day that we get to come and speak with an audience on a subject that everybody quite loosely uses. Fintech is the most loosely used word in our parlance across at least financial services. So I'm very grateful the central bank has taken steps to kind of create a formal framework and have a proper discussion that involves not just the banking industry but the whole ecosystem, because as this conference kind of builds, you'll realize that, and at least that's what I believe, that if you don't create a symbiotic environment, no one is going to benefit. Banks and fintechs and regulators and government and telcos can't exist in isolation. The model works only, and at least from what I've seen in Africa, and we'll talk a bit of that later, is the best models are where you build that partnership. So we've tried many models in Africa across our businesses in East and West and Southern Africa, and the ones that seem to work are the ones where we've been able to create a symbiotic relationship, where everybody comes together with a common purpose. And that common purpose really is the solution for the customer. The profit objective, etc., is an outcome of that strategy. But if you come together to solution for the customer, then everything else is a natural outcome of that process. As far as the Barclays ABSA group on the continent are concerned, we've got a pretty large footprint. We've started this journey of trying to make sense of innovation, and not necessarily fintech, but innovation about 5 years back when our parent company set up a investment fund. And a consequence of that was we set up accelerators in Cape Town. So the Barclays ABSA group still runs those accelerators in Cape Town. We have incubated tens and scores of companies over the many years. There are some that are quite prominent and successful on the continent, and there are some that are still struggling, and that's really the story. It's always a mixed bag, as in the case of anything that appears new. It takes me back 20 years when we talked about the the whole dot-com boom, and everybody was so excited about the hundreds and thousands of dot-com companies that emerged. But in reality, there are only a handful of them that became what are called as unicorns. The others have all perished. You don't even remember 99% of those dot-coms. And I think this industry will go through a very similar phase. And so we've got to be very, very careful about the choices we make, and where do you hedge, and what kind of propositions should be encouraged through this innovation capability, and what are some of the things that from security standpoint should be just left to those who know it better to do. And I think that is really where the measured approach of regulations is going to be important. For me, I think there are just three messages before I end. I think number one, and that audio-visual did capture it, but I'd just like to kind of structure it a little more, is, I started banking 25 years back. Banks were the fintechs then. There was nothing called fintech. Everything, all the innovation that you see in banking came from the banks themselves. Whether it's the ATM that was launched 50 years back by Barclays, or anything else that you're able to do today, which is outside the branch, is really innovation that the banks did. It's in the last 8 to 10 years that innovation coming from banks took a backseat. And there are many reasons for that, and I don't know if we'll have time to go through that. But that's really where you see all these smart guys coming in, and this emergence of fintechs to support the customer value. I think that the second point for me is, specific to Seychelles, is if the intention of the government is to really create a fintech hub here, then I think a lot needs to be done to also promote talent that is local. There's a lot of stress that has to be paid to colleges and universities to skill people in this direction. And Nick mentioned that not all innovators are in their 20s. So the reality is the new words that you hear, blockchain, and you hear cryptocurrency, and you hear all these distributed ledger, etc. 99% of people don't understand what that means. It's just used because somebody uses it. It's very few people who actually get it. It's good and bad from that perspective. So knowledge needs to be more broadly distributed if we have to build local talent and interest in generating or creating that innovation and fintech hub, in my view. And lastly, I think somewhere a balance has to be created between regulation and innovation. It cannot be completely skewed to one or the other. It can create a significant amount of opportunity, but it can also create a lot of risk. And depending on the sophistication of the financial markets in the country, I think regulators will have to be more agile in keeping pace with emerging technologies and what that means, from changing regulations such that the joy of running a fintech company, which is really fast, low cost, and agile, does not go away. Thank you very much.
Thank you very much. Thank you very much for that, Vimal. Some interesting insights on sort of knowledge and skills, which is actually also the topic of one of our sessions sort of later today. I wanted to pick up a little bit more on that symbiotic relationship that you said that banks and fintechs, or so maybe let's make it broader, so maybe incumbents and fintechs need to have. And I was wondering, Henry, if you could maybe expand on that and talk a little bit more about Visa and how you've been actually engaging as quite a big incumbent and a player that's been in the market for such a long time, how you've actually been interacting with the other stakeholders in the market.
Hi everyone. So I look after solutions and how solutions fit within East African region. So as Visa, I think I like that incumbent because I think we have been there for 6 years. If you think about the first card that came into the market, was a Visa card, and over time we have seen technology evolve from cards into what you call tokenization, into what we call 3D secure, into QR payments, and all these are technologies that are coming in. And as Visa, we have actually been investing in these technologies. We are largely a B2B company, so we are not entirely on the face of the customer and putting out solutions that relate to the customer. So we work with different partners, and towards this, then we do different things. We invest, and so one of the things we have done, especially for the new technologies, what we do is we invest into people and companies that we see who are developing technologies. And one of them would be like, you're looking at blockchain, and someone would ask, what are we doing in blockchain? So at the moment, we see it as a commodity. You know, it has still not evolved into a currency, a fiat currency. So we are still involved, but in the sense of investing into the companies that do that. Whether it's blockchain, is artificial intelligence, and here we are looking at things like fraud detection. So we implement such technologies within. And on the fintech space, and I think this has been the buzzword. But if you look at fintech, this is really about how well are we integrating the new technology into solving the market needs. And fintechs, what they were before, they were maybe Visa and banks, but there are now people who are more agile and who are looking at how can they integrate. And so we need to look at them from the agility point of view. So, and also coming back from not just a solution, not just using technology or talking about AI, talking about blockchain, not just talking about the technology, but looking at how does that technology fit into the market. And so on this, we have a program called the Fintech Fast Track Program, which we implemented mid last year, and this looks at how do we incorporate all these new technologies and companies who are developing these solutions. How do we get them into the ecosystem, into the economy? And so here we work with the fintechs in collaboration with the banks. So we introduce them to banks, we introduce them to the regulator, because we work and ensure the regulator understands what they are looking at in this sense, and make sure that their process from development to putting a solution into the market, it's faster and it's accelerated. Yeah. Thank you.
Thank you very much for that, Henry. Mr. Cyril, if we could move to you and you tell us a little bit about the Chamber of Commerce itself and how it works in the sector, and maybe a little bit about your members and whether you actually have fintechs there right now.
I think you have to understand the context of SCCI in Seychelles. Up until, I'd say, 2 years ago, it was pretty political. There's been a new team that came on board, and we are in the process of trying to redirect what the chambers does for business in Seychelles. And the new team, which was elected only around, I'd say, for 2 months ago, but we've been trying to push our members to continue to explore areas that would sort of help them do their business better. But at this moment in time, one of the problems that our members are facing is the lack of consultation from government with policies that not only impact on businesses, but there's a cost to the business as well. So if I'm to comment on what this will help our business, is that there's a time differential. The focus right now is sort out the business, sort out the policy issues, sort out the cost of business, sort out the ease of doing business, sort out trying to get the government to sit with businesses and understand the challenges that we face in Seychelles. But at the same time, yes, I think if you look at the time horizon, which was mentioned, businesses in Seychelles should make the most of what the central bank's trying to do, which I commend them, because that would help them in terms of the ease of doing business and the cost of the business. And I take personal experiences as well. I've got 2 kids at university, and I find challenges in sending funds to them. But I'm lucky because I've got an account abroad, and that takes minutes. By the time you're not within that time frame. So there are opportunities, a lot of opportunities, but unfortunately right now the focus is not on enabling business in Seychelles, is rather, I'd say, political short-termism. But I've seen the VP here, I've seen the minister here, so I hope they've heard the message. And you mentioned in the question to me about the banks. Banks is part of SCCI, and I'm sure they want us to succeed because they will succeed as well. But unfortunately, right now the challenge is to get politicians and to do their political bit, and businesses do their business bit. Thank you.
Thank you for that. Thank you for that. Slightly contentious topic. So, so maybe putting back a question on you. So understandably, obviously, the government and the relationship between governments and industry is an important relationship and something we should explore. But what about the banks themselves, or sort of the incumbents, as I said before, themselves? Is there some disruption that they're seeing in the market that they're either thinking of bringing into their sector, thinking of working with the fintechs? I was wondering whether within the market and within the players in the system itself, are you seeing anything?
Well, I think you've heard it. It has been mentioned that some banks have come up with new products, and the banks that that are operating in Seychelles are top bankers, and I'm sure they won't want to be left behind. So from what we at Chambers are seeing, there's the willingness to explore and expand. But at the same time, like any business, if the investment environment is not, I would not say stable, because Seychelles is quite stable, but it's not clear. Because if you come up with a product that you try to implement, and there is a policy change that impacts on putting the product forward, you tend to pull back. So this is why in our discussions with government, we keep talking to them about that. It is important that there are policy consultations on issues that impact. So we tell them what our members are doing. They tell them what they want to do because they run the country, and we try to meet a happy medium, because right now the challenge is to get that happy medium. So the banks are doing their best, but I think there are constraints in making it happen.
Thank you. Nectarios, last but not least, I'm hoping you'll give us quite a good view of what your experience has been, especially in this collaboration space, whether it's a good idea, whether it's not, maybe some insights into what you've seen has actually worked, and maybe a contrarian view.
I was about to say, I realize my role here is agent provocateur, so. I found in my time that it's always helpful to use analogies from the romantic relationships in life. There's a lot of dating. There's no meaningful relationships, let alone marriages, and absolutely no babies. That's what's happening. So it's amazing to see people being out there in the dating world, right? The banks meeting the companies, trying to figure out if there's a match. At some point, there's this perceived incompatibility, and that usually keeps people from going further. So I'm, as you can imagine, quite cynical about a lot of things that the banks are doing, but at the same time, they're all being labeled as partnerships, and this is actually where the cynicism comes in. It's okay to be candid about where you are in your journey and just to show that you're trying really hard. But it's not okay to pretend that you're further down the track that you actually are. My favorite question when I get the chance to meet somebody, actually usually a P&L owner, and you go, what's the biggest problem? I can bring you a startup that is at the right stage, with the right funding, with proven technology that can solve your problem. How quickly can you move? So these partnerships don't really exist. What happens is there's a lot of very kind of tiptoeing around each other, trying to sniff each other out, both sides trying to learn each other's language, the mechanisms, the processes, and that's fine, and that's important. But what does it take to nudge further? And the fun thing, of course, is when you ask the banks what keeps you from doing this, usually they use regulation as an excuse because they have to put all the money to meet regulatory compliance and IT changes. But when you talk to the regulators, maybe it's fun to talk to the FCA about this, and they go, I wish the banks would stop doing that. Because reality is, it's not just that, right? So these relationships don't really exist. The partnerships don't really exist. The word collaboration has been bandied around so much and has very little meaning. So I reserve the right to remain skeptical. But at the same time, it's kind of cute, and I don't want to be aggressive, but it's really important to acknowledge that Barclays did create the first ATM. Visa did create the first credit card. Amazing. But you cannot feed off that legacy because the world is changing, and we don't want to have another Blockbuster moment or a Kodak moment.
So just to follow on from that, so are you saying that with Barclays and the first ATM and Visas and the card, lots of the innovation is happening internally, but very little is happening through external participants, and so that collaboration, even even though we see the world shifting and it's moving from being a very competitive, fintechs are disrupting sort of the status quo and we need to crush them, to we need to work with them, is not actually relevant in the true world?
The incumbents have grown over the years in a very messy way, with acquisitions, with mergers, etc., and they're dealing with a lot of legacy, which keeps them from keeping up with what's happening in the outside world. And that recognition should actually have some logical consequences, which is, if we can't do it ourselves, we used to be good at this, but now things are difficult, and that's okay. But what do you do to actually kind of look outside to get all that new stuff in? That's my perspective. It's interesting if you just take the big four retail banks in the UK, everyone now, you can see, are trying to place their bets slightly differently, or where they want to be playing in the retail sector, right? So there's a whole debate, and I don't know if the audience is familiar with this, about the unbundling of the bank, right? So is it going to be the user experience? Is it going to be, which of the layers is it that actually the banks want to be doing in the future, because they cannot do everything? And then they pick their battles, and that's where they, but the partnerships, etc. And that's an important conversation to have, but I'm not sure the conversation is actually happening.
Thank you for that. It's always good to have a contrarian view on the panel. It's quite boring when everyone agrees. So I've seen Mr. Vimal shake his head quite vigorously, so maybe I'll give you the floor first to maybe explain, because obviously Barclays has done quite a bit, has worked quite hard. And maybe if you give us some examples of what actually might have worked, that might sort of, you know, bolster that argument.
I'm not going to sell the bank, but I want to talk in general. And Nick, respectfully, you know, you need the dating for the marriage to happen, and then the child, the baby to happen. So, you know, and modern world, baby can happen without marriage also. So, but coming back to, you know, why I have a slightly different view is, and I'll talk about the Barclays experience later, but, you know, let's just go to East Africa. And those of you who are closer on the ground, look at what the M-Pesa ecosystem has done to that country. It's oft talked about, it's written much. I'm not going to go into the detail, but suffice to say that if you build the right ecosystem where all stakeholders come together for a common cause, then that marriage is possible. And it is a sustainable marriage. If you look at M-Pesa, it's a big MNO working with the government, working with the central ID system of the government, working with all the banks for the balance sheet, and solutioning the need of the customer. The need of the customer was that migrant laborers could not send money home. And that was where M-Pesa started, is how does a migrant labor working in Nairobi send money to the cornermost village in Kenya? A simple idea, and they solutioned it beautifully through the mobile. Kenya is one of the most mobile countries in the world. But now that conversation has moved from just transferring money to M-Pesa really becoming a parallel currency to the shilling. There is no individual in that country who does not have an M-Pesa account. And the trust in that whole ecosystem for a Kenyan is higher than any other mode of payment. Not even a debit or a credit card has that same level of confidence for the Kenyan customer that an M-Pesa. And therefore it is possible to build those symbiotic, what I call as symbiotic relationships. Now coming to Barclays, we've had a lot of hits and many misses, as the case that I was trying to explain. But the hits that we have, you know, some of our partnerships that are working well in Southern Africa are really beginning to become what I call as an alternate business model for the bank. They're beginning, they're green shoots, but we're very confident that these over time will emerge as a parallel business model for the bank, you know, in Africa. So Nick, I know you probably have a broader canvas than I have, but I'm kind of narrowing into what I see more regularly and what I'm part of. And I very strongly believe that if you want a solution for a common good, and if everybody has the same purpose, it is possible to work and come together without being parochial about your own interests.
Thank you for that. And then I think it comes back to some of the points that we heard earlier, that we find the problem and then we find the solution that works for the problem, and what do we do to do that? Nick, I don't know if you want to respond, although I don't want to turn this into a debate before I give the floor to Mr. Kagame to respond as well.
I wish people would stop quoting the one example where it works, which is M-Pesa. It's an amazing example. And by the way, I think it's also important that people like you actually talk the way you talk, because not everybody does that. So I'm still remaining cynical for one particular reason. And this is not everybody's driven by the common good. Right? The reason why most organizations are lethargic is because there's no shareholder expectation to do something. It's as simple as that. If you look at Google being such an innovative company, it's because 25% of their activities and the money has to be spent on R&D, right? How much money do banks have to spend on new products, new solutions, and babies?
So we need to move away from our single bottom line of profit-driven margins, and maybe move towards a common good and have sort of other bottom lines to worry about. Mr. Kagame, if I don't know if you want to feed him.
Yes. So when I look at this, I look at it as a conflict because of the needs. I would say the needs of the different people. So you look at a fintech, they are agile, they know technology, they know how to develop faster, they are they're not really risk averse, so they are quick to develop something to the market. And the incumbents on the other side, they have something to protect. And so it has to be something that strikes the balance, because they know they have market knowledge, they know the standards, they are keen on security, they're keen on reliability. And so it's until these two people find a place where they meet in the central, that's when the marriage works. And I think some of the things we are doing, and I think over time is, it can be different things. It can be a complete buyout. So we have examples of what we have done as Visa. So we had this e-commerce gateway that was doing online acceptance called CyberSource. And so in such case, then, as the incumbent, then we saw this as someone who is doing something that we are keen on and would want to integrate into our systems. And we have taken it as a whole. So we have not tried to get parts of it. We have taken it as a whole. There are times where we invest partially because we are keen on what are these people doing. And one example that we did recently was Blanche, which is doing lending. And so we are keen on how can lending in the long term influence the consumer behavior and such. So these marriages will take some time to work, but we must be keen to always continue looking at what are the advantages, what are each person's roles and responsibilities, and how also do we look at standardization. So the other concept is about developing silos. So there is a risk of having silos where this person develops this product, another person develops another product, and we don't have standardization. So this is also a concept that I think in terms of stakeholder management, in terms of collaboration, needs to be brought out.
Great. Thank you very much for that. I was wondering if we could move on to regulation and the role of the regulator. Ken, I was wondering if you could tell us, do you think the regulator, obviously we understand that the regulator has a role to play in industry in sort of creating the enabling environments and supporting the policy framework, which we will talk about in much more depth. But in terms of actually facilitating collaboration and competition in the marketplace, do you think that's the role of the regulator, or that's something best left to participants?
Yeah, it's an important point to talk about, particularly competition, and I see the issue du jour is payments, and it is in most countries. The role of regulator, if we focus just on payments, competition is a big issue. Banks at present are pretty happy with the way the current payment system works. The bank gets a fee for initiating the transfer. A custodian bank on the other end gets a fee for processing that. The final bank that disperses the money, the person on the other end gets a fee. And then there's dozens of different service providers in the middle that facilitate all the little bits and pieces of the operations of that transaction. Nobody's really interested in disrupting that. So Europe came up with the Payment Services Directive. The regulator said, we need to open banking. We need to allow new service providers to be able to access the systems so that we can generate innovation. There was a force that was put in place by the regulator. Well, then the regulator has to look at data protection along it. At the same time they did that, they put in stringent data protection rules, which raised a lot of questions about can you actually open the bank APIs to service providers. At the same time, we want to protect data. Then while they're protecting data, it began to raise questions about how do we use the cloud. And service providers big banks are using the cloud to help further their innovation projects, but then they can't use the cloud in certain jurisdictions because data localization. So the regulator, whether it's the regulator's role to say, these are the things we're going to do so that we can support innovation, it's incumbent upon the regulator to make sure the things that they're doing don't inhibit innovation. As far as on the collaboration piece, as I talked about in the beginning, it is important to facilitate the environment, the community. So we have these programs in place in our center to create a community where the, I don't want to call them the disruptors, but the fintech, the SMEs can come in and we can put them in touch with the incumbents. Small startups don't necessarily have an in to the door. So in our jurisdiction, we've taken the position saying, and it's us with also, there's two pillars in our jurisdiction, there's a business development and the regulator. We've taken the position that we can offer those introductions to the incumbents. And the benefit to the incumbents is that they're getting to learn more about what the innovations are. They're also showing the regulator that they are open to innovation. It gives us some insight into where the needs are at and which types of innovations are being looked at. And it gives us some insight to which of our current regulations do we need to look at, and are there any areas in the regulations that are going to create a problem down the road. And we can talk about being forward-looking in regulation, we can talk about being agile, but what we don't want to do is create new regulations and focus on, say, blockchain. Create a regulation today. Tomorrow, there is some new innovation that uses blockchain in some different way that we didn't think about. Now we have to go back and rewrite the regulations. So it is important for the regulator to, I don't want to say insert themselves, but make sure that the regulator is a part of the discussions that are happening between the innovators and, not that the incumbents aren't innovators, but the incumbent institutions and the newcomers. Make sure those discussions are happening, make sure the regulator is aware that those discussions are, and make sure the regulator is continually looking at its own regulatory environment and making sure that it's not such that it's stifling innovation, it's getting in the way of competition, as we saw with the Payment Services Directive. That was particularly targeted at making sure there was competition and the startups were not, the innovators were not being kept out of the marketplace.
Thank you for that. Does anyone else want to come in on the role of the regulator in actually facilitating not relationships with them in the industry, but maybe within the industry themselves?
So look, I think this is a very difficult thing for a regulator to get into. Often a lot of innovation that comes in stays outside normal banking regulation, because as new things begin to emerge, even regulators are building their knowledge base. Just because you're a regulator doesn't mean that you know everything under the universe. I mean, at the end of the day, regulators are also beginning to understand, does this create systemic risk? Is this the right thing for the financial services environment? And how is this going to value add? So one of the biggest issues is, if you look at any country in Africa, you have to worry about the regulations of the country. Then there are EU laws on top of that, and then there are American laws on top of that. So it's not that simple. There is no cookie cutter approach to building regulations that facilitate growth of fintechs. It has to be a trial and error, and sometimes what you write today, you may have to rewrite in a week's time, because things are moving fast. And that's what I said in my beginning, is we've got to create an optimum approach between regulation and innovation. So you don't want to be over-regulated, and you don't want to give it a free hand. I mean, you don't want to go back to the days of the financial crisis when nothing was regulated. But for me, the biggest area of concern that always remains is managing financial crime. Because financial crime is one of the biggest modern headaches that financial institutions and countries live with. So how do you ensure that whatever you're permitting within your boundaries is not adding to this headache? And how do we manage financial crime really proactively without stifling innovation? So it's a very difficult role that regulators have today.
Absolutely, I couldn't agree with you more. I used to be a regulator until a year ago, so couldn't agree with you more. Of course.
Just one follow-up comment on that, because this goes to a comment earlier about fintechs. They blame the regulator. And the incumbents blame the regulator. Everybody, the reason things aren't succeeding is it's the regulator's fault. And speaking to the regulators in the room, I'd say don't be afraid to regulate, because the fintechs benefit from the regulation. If you don't have good, strong regulation in place, the fintechs aren't going to get a client base. And the incumbents aren't going to grow, particularly internationally, if you don't have regulations that are expected outside the borders. The one thing you don't want to be thought of, and is not of value to be thought of, is an offshore jurisdiction. We deal with, we're an offshore, onshore. This is an issue we deal with all the time. We've spent a lot of time engaging with other regulators, the FCA, the US regulators, Hong Kong, Singapore, getting them to understand how we regulate and what our objectives are and how we view innovations that are happening. So it's very important to say don't be, you will be pushed around by fintechs. They tried to do it. They want to make you the reason they have failed, and the incumbents will want to make you the reason that they can't innovate any better than they are. But you've got to stay strong, because the good, solid, meaningful regulation that is thought out does actually benefit the innovation. It benefits the fintechs and all the existing institutions.
Building on Ken's comment, where we see more thriving ecosystems, be it the UK, be it Singapore, be it Australia, it is where the regulators actually have defined their role in this. So rather than putting the shutter down like in the US. So it's really important to stress that. So it's not about the specifics of the regulation. It's first of all acknowledging that we need to learn, as you say. And the UK, when they started, it was more about, well, they first of all ran some innovation service in the market. It was literally like, this is new, we know nothing about this, we need to understand what's happening before we can even start a conversation. That honesty is super important. And that feeds back, because then the industry is more engaged, the startups are more engaged. Singapore with MAS, similar approach. In the Middle East, we see quite a few activities, both in Abu Dhabi and in Dubai, right? I think it's sometimes really disheartening to see regulators, just because they don't understand something, just not to engage. And in Germany, for instance, with BaFin, it was fascinating to see at the beginning, it was really hard to get any conversation going, and then you've got very stringent data protection laws and all the other things. But little by little, there's this recognition that we actually have an important part to play in this.
Thank you for that. And that's definitely true. So having been previously at the Bank of England and worked quite closely with FCA regulators as well, I think our first thing was to say, we don't know everything about the market. This is an area that we've never dealt with before. So actually the learning part, as we'd said before, and understanding it, and actually even talking to firms that we didn't normally regulate or wouldn't fall under our mandate, was actually a very interesting and useful exercise for us. I was wondering, so we've talked about regulators, we've talked about banks, we've talked a bit about fintechs. I was wondering whether there were other stakeholders that we should be considering within the ecosystem as a whole. Mr. Cyril, if I go to you first.
I think an example was used by Mr. Mumba, sorry, what's your name, about fishing in Seychelles, right? I think the model would apply, but unfortunately the focus is not really getting that sorted out, because behind it there are still many more problems in terms of enabling the fishermen to source out the fish, the ice. So that's the priority right now. So of course there's a lot of things to be done to make it happen, because you're right, I've worked in hotels and sourcing naturally. For you to eat a nice local fish is better than imported fish. But unfortunately it's difficult to have this coordinated, because the way the system is set up in Seychelles. This is why it is important that all the policymakers in Seychelles, what central bank is doing is nice, but the other people sit across the table to talk about all the issues, to put it together, to make it happen in the end. Because like I say, we talk about the time horizon. It's important we have it now, but you have to be prepared for it. There's a lot of opportunities across the board in Seychelles. Selling excursions, packages, you can all do that. But unfortunately, right now, the focus is trying to understand the policies that impacts the business rather than the payment issues and how to maximize my business to create profit. So yes, the opportunities are there, but unfortunately, I keep repeating that because that is impacting all the businesses. I think behind it, there are some major issues to be ironed out for us to get to there.
Thank you. Mr. Kagame, are there other stakeholders that we should be considering as well?
So when I think about stakeholders, I go back to what are we solving for, because that's when you get to stakeholders. Because if a fintech will be solving for something that concerns insurance, and I think we have an example in Kenya where a fintech was solving for a credit facility for motorcycle riders. We call them boda boda, and so solving for a credit facility for them. And then over time, they discovered that these guys actually get into a lot of accidents, and so one of the things that they need also is also insurance, personal accident cover. And so as you build your solution as a fintech, then you need to think about who is it in the ecosystem that I need to also get into. There'll be some regulation, there'll be another partner. If you're looking at a supply chain, then you're working with one of the distributors, then that becomes another stakeholder. So the question of stakeholders depends on the use case.
And also what, sorry? Telcos. Okay. Yes, of course. Anything else from the audience? Just talk loudly, I guess.
Yeah, very useful comments. I think when you look at it from our experience from the Alliance for Financial Inclusion perspective, I see a divide in the discussion on the panel. The divide, firstly, that I see is most of the discussion seem to focus on the developed country regulator in terms of what you are viewing as the ecosystem is in there. From the developing country regulator, we are not seeing that problem because of what has evolved in the last 10 years. For instance, we are now seeing the development of very effective national level coordination mechanism, whereby when this is developed, it's true for Kenya, it's true for Tanzania, it's true for the Pacific islands, where this national coordination mechanism, first of all, is born out of a recognition from the stakeholders within the country as to what is their specific role in this whole ecosystem. So whether you have telcos, you have got banks, you've got private to make, is that in this recognition of stakeholders, don't dictate to the stakeholder, each stakeholder, what's their role. They have to identify their role themselves and carve out their own responsibility. And of course, the monitoring and evaluation in terms of how each stakeholder, for instance, you may find that the Minister of Finance needs to pass a law, the central bank needs to pass a regulation, to facilitate anything. And each stakeholder has to ride up to that. So I think there's a little bit of a divide that I can see. Maybe there's too much fragmentation in the developed country regulator. The developing country regulator, I think, has reasonably transformed in the last 10 years to be able to facilitate. It would have been unheard of 10 years ago that the Central Bank of Seychelles is even organizing this forum to garner stakeholder support.
So thank you very much for that. I think Carolyn has one question, and hopefully there will be time during the break as well to have lots of questions.
Yeah, it's more of a comment. I think there's also a strategic question that the government probably still has to ask itself is, are we talking about fintech regulation in terms of increasing the usage of existing fintech solutions that are out there and currently the players who could use them are not using them, and we want to encourage that? Or, and this is where I feel the conversation sometimes moves to, are we talking about encouraging an environment where fintech innovation happens in the Seychelles, right? I mean, these two things require very different regulatory frameworks. They don't have to be exclusive, but maybe one can build on the other. And I think this is where the bigger strategy on digital transformation for the country comes in. What is the value proposition? Are we trying to solve a problem at the moment for the financial sector, or are we aiming to diversify the economy by creating a new fintech innovation space in the country?
Thank you for that. I might try and answer that myself, actually. So part of what we're doing at this conference as well is to try and answer that particular question and try and understand what actually works best here. What are the key questions we need to answer? What are the main objectives? And so I think partly it is to not reinvent the wheel and to use what is out there to actually improve the way Seychelles might function, or the government as functions as a government, and to use it as a test bed for sort of all the innovation out there. But it is partly as well to encourage skills and encourage sort of the economy to grow here and sort of development of fintech within the country itself. So in the interest of time, sorry.
I'd just like to make two comments. I don't know if the Seychelles member would agree with me. I think in regards to legislation and regulations, it's too slow. Governor, you let me know. Pretty slow. So as an innovator, you waste your time and your money, because time is money. And with regards to digitization, we have a challenge in Seychelles. I chair the planning board, and we talk about digitizing the submission to the board. Yet the agent can submit the stuff to the. So there's like I go back to the issue. We talk about we going there, we talk about getting there, but behind there's a lot of stuff to be ironed out. If that helps.
So I'm going to ask the panelists one last question to sort of finish us up. And Nectarius, I'm going to start with you, because actually this was kind of your idea. So going back to the topic of sort of the panel, and I know we've sort of moved around quite a bit, but on collaboration, what are the measures of success? How would you actually measure success? And I would probably ask all the panelists the same question, so if you can think about that a little bit, please. Thank you.
Different things for different people. For the central bank, success is something very specific. If it's about nurturing the ecosystem, it's about making it easy, et cetera, easy to do business, et cetera, et cetera. So it's not an easy question. The key thing is actually to sit down and have that thought experiment first to figure out what success means for every constituent. And even that is not happening in most markets. So just understanding that, based to your question, Carolyn, is what is it actually that we're looking to build, and how will we measure the success, including time, including ease of execution, everything else. That's probably more important than giving a specific answer to what success would be.
Personally, I'm an optimist by nature, and I think that it is a younger generation of Seychelles, because the pressure is going to put, it's going to make it happen. So it will happen, but it's going to have to be a push from, and I mean, you can feel it, but right now, I suppose because of the age gaps between the politician and the younger generation, it's taking a while, but it will happen. I'm optimist.
So the measure of success is I guess where the talent and what people are developing sees the light of day. And this will involve collaboration with different people, involve ensuring that the different good things that each one brings to the board are taken over up to a product that works for the end consumer. That would be the measure of success.
For me, I'm like a stuck tape recorder. I think for me, it's very clear. The clear message or the measure of success is, Nick put up this slide where he had all the best fintechs, and it was mostly Asia, Europe, and the US. There wasn't much from Africa. And I think the measure of success will be Africa becoming the next bed where all the big unicorns will emerge from. And that can only happen if everybody in that ecosystem starts to work together, and solutions for the needs and the gaps that exist. And there's no better place than our continent for this, given the opportunity that exists. So for me, I mean, I'd like to really see in the next 2 or 3 years, when you put up that slide, we've got some names from the continent, and that'll be a good measure of success. And I wish the governor good luck. I hope we're able to create the innovation hub for the continent here. I mean, it's still early days on the continent. Nothing much has really happened. It's a lot of stuff mushrooming here and there, not really organized or part of a framework. So maybe it's Seychelles that takes the lead, and everybody starts to run here like the old California gold rush. So I wish you luck, Governor. Thank you.
It's a very interesting question. It's one we've just started to ask ourselves. And the first question before you can ask and answer that is, what are you trying to achieve? And for us as a regulator, we're not necessarily trying to achieve new innovations and get new startups into the marketplace. We're trying to make sure that whatever happens, we maintain a safe marketplace and we maintain customer protections. So just to give you an idea, over the last 2 years, we've engaged through our sandbox with over 150 fintechs that have wanted to come in the program. We've had only 2 go through the program. Only 2 licenses we've given out. And one would look at that and say, well, it's a failed program. What was the point of doing the whole thing? In addition to myself, I have a team of 4 And then we have a policy person who's dedicated full time to this. So we have significant resource on it, and we've dealt with a lot of firms. Did we fail or did we not? Well, we know what two have gone through it. Of a lot of the firms we've engaged with, we know there's been a learning on their end. We see a lot of them, they've gone from wanting to be a regulated financial institution, an area where we've come to discover they had no idea what they were getting into. They didn't know the resource requirements, they didn't understand the regulations, they didn't even barely understand the market they're trying to get into. And we've seen them partner up with banks, with insurers, with other existing institutions that have the regulatory structure in place and they have the client bases. So from that, we look at that, and I don't have the exact numbers of how this goes, but we see some of the migration and we say, that's a success. That's a firm that if we didn't exist as a regulator, might have just gone free in the marketplace and caused a lot of problems. But through engaging with us, we've helped them understand what exactly it is they're doing and where they fit into the environment that we regulate.
So thank you everyone for those really insightful comments. I think there lies a place where we're going from competition to collaboration. It means different things for different people, but I think the key message to sort of remain is that we need to keep the sort of the big picture in mind and not lose focus and actually understand what we're focusing on right from the beginning, and then everything else sort of will follow through. So thank you very much for my great panelists, and I hope all of you have time during the course of the next few days to sort of speak to them and ask them any of the questions that we weren't able to cover in the panel today. Thank you.
Structure, this the element of fintech comes in. And the fintech comes in about expanding a bit more of what currently is being offered. For example, in terms of securities, insurance, pension. So they want to diversify a bit more into that particular sector. And with the promulgation of the sandbox regulation, which aims to be finalized sometimes this year, the government wants to basically test the waters, at least some trial and error, to see from a securities point of view, mostly from the offshore sector, how fintech will actually work. And from that, it will give the government an idea to further develop the fintech strategy, which will allow the promulgation of different programs, policies, that will further enhance the different products relating to fintech. It will broaden the spectrum so that the fintech as a whole will not only target the offshore sector, but the whole financial sector as a whole. So this is the vision of what the government aims to achieve for the next 2 or 3, 4, 5 years. And we hope to get some collaboration of different stakeholders and the public in terms of accepting technology as a new form of trading and as a new form of engaging in different financial services. Thank you.
Thank you very much. So, Ministry of Finance has a particularly unique overview in terms of the economy and how to drive digitalization. So very, very valuable. Giyazuddin is joining us, Mohammed is joining us from AFI, who's a partner for this event. So he's Senior Policy Manager. Over to you.
Thank you, Doug. Just a brief about myself. I'm Giyaz, Policy Manager at Alliance for Financial Inclusion. I lead the digital finance and fintech work with AFI. First of all, I would like to thank the Governor of Central Bank of Seychelles and her team, and also the other stakeholders for inviting us to participate in this workshop. We are a strong delegation here led by the Deputy Executive Director and also by the regional head for Africa. We also have a few members from the AFI network who will be participating through the course of the panel. So thank you again, Madam Governor, for inviting us. Uh, on a lighter note, my son thinks that I'm here to collect seashells. So yeah, if you're watching, son, the work is in progress. So I'll directly go touch briefly on the FinTech for Financial Inclusion framework that we've launched last year along the lines of our Global Policy Forum. I request the slide to be put up on the, yeah. So this framework talks about how FinTech can be leveraged. FinTech is nothing new, it's a leveraging technology to offer financial services, but it has gained momentum in the last 5 to 7 years given the rapid evolution in the adoption of mobile phones and technology. So what we are talking about here is how can FinTech be leveraged to advance inclusion from a 4-pillar standpoint. And again, just to provide some context here, this is a living document. This is not a carving of the stone. It just is based on our observation and the feedback that we get from the member network, which goes beyond 90 countries throughout the globe. And also, this framework aligns very well with the Bali FinTech agenda that IMF and World Bank has come up with. While the FinTech agenda talks broadly about the financial sector space, our framework delves deeper into FinTech and its relevance to inclusion, actually. So the framework in itself has 4 pillars. First is on digital ID and eKYC, second on open electronic payment systems, third on account opening and digitization of payments, and fourth is on design of digital financial market infrastructure and systems. And these 4 pillars sit strongly on a foundational basis of enabling a regulatory framework. So this talks about innovative regulatory approaches, and also on ways to manage innovation and oversight. So specifically talking about cybersecurity, consumer protection, and data privacy aspects. I'll cover those in detail later. I'll take briefly 30 seconds for each of the pillars with your permission, Chair. So first on digital ID and eKYC. Again, more than 1.1 billion people do not have ID, and again, because of the lack of ID, the latest global FinTech says that 19% of the adults who cited lack of, who do not have an account, cited lack of documentation as a reason for not having an account, actually. So having an ID is an important segue to the financial systems, actually. Further, electronic KYC is also something, not only having digital ID, but connecting it to the broader financial sector through eKYC, through authentication, verification of transactions is really very important. And many countries are leading this. India for sure, many of us would have heard of Aadhaar in India, how it is facilitating more than 300 million eKYC transactions in a month. Apart from India, we also have countries like Jordan who are facilitating payments to forcibly displaced persons by providing them biometric authentication. So that's the first pillar. Second is on open electronic payment systems. So again, payment systems are the arteries for the financial sector. They provide rails for building on additional value-added financial services. So here we have various types of payment systems, the ones owned and operated by the central bank or the government themselves, so the national retail payment systems of the world. So we have Thailand, who have national retail payment systems, Philippines, many of our member countries, where the central bank themselves, through the collaboration of the stakeholders, own and operate the retail payment system. Second is a broad market-led approach where interoperable domestic and regional systems, payment systems take place. And a new phenomenon that has emerged, especially in Southeast Asia and East Asia, is of super platforms, these big tech companies coming in and providing payments through their applications actually. Grab is one based out of Singapore and operating all across Southeast Asia. We know Alibaba, from Alibaba, WeChat, so on and so forth. So that's the second pillar. Third pillar is on account opening. So with all the progress that we have seen in the last 10 years, we still have 1.7 billion adults who do not have an account. So access still remains an issue actually. And one of the key observations from our interaction with the members is government plays a very key role in broadening the access. Government typically is the largest organized employer within the ecosystem. So digitizing G2P payments, digitizing government person to government payments is a very, very important strategy in broadening access to transaction and banking accounts actually. The fourth pillar is on once you've created the rails, once you've created the infrastructure, and once you've broadened the access, how do you deepen the usage and quality of financial services? Again, that is more very relevant to Seychelles context again. Providing savings services, providing credit services based on new alternative data, your phone usage, your SMS usage, social media usage, your payments transactions. So based on all these soft data that you have about the customer, how can you offer additional value added services? Not limited to credit. Credit is very important, but beyond credit, how can we offer savings services? How can we offer insurance services? Cross-border remittance services is something that this pillar talks about. Yeah, with that broad overview, I'll pass it on to you. If there are any further questions, I'll take it later.
Thank you very much. Bernard, please. MD Mauritius Commercial Bank, great to have you.
So good morning, everyone. Representative from MCB, one of the largest banks in this region in southern Indian Ocean. So we are present in Seychelles, Maldives, Madagascar. We know a bit of the island economies, and basically what we've been doing here, it reflects a bit of the island economy strategy that we've had in Mauritius. So there's been quite some thinking that has gone into how we need to increase the financial inclusion. And this comes mainly from what our head office has been looking into, but also we've contributed a lot into the thinking, and we are constantly in contact with the Seychelles Bankers Association and Central Bank in terms of the National Payments Council, for instance, to discuss how the payments landscapes needs to evolve. So in terms of financial inclusion, we've recently, I think it was mentioned in the presentation, and I was quite proud that our product, our mobile banking app was mentioned. We are quite happy that we managed to release it. Today, my main challenge is how to increase the rate of penetration. And this is where it reflects a bit of the issues we face in this environment of Seychelles, which sometimes become a bit similar to what we face in Mauritius. So what is the first item that we've seen? When we launched the product, it was a lot of testing around what would make our customers be interested in that product, what would make them be interested to find out how Jews would change the way they transact with the bank. So the first question was, how do we get them their attention, and how do we educate them about the new options, that the new exciting options that we offer through Jews? And this is one of the major steps that we have to take. There's both the human resource side from the banker's perspective of how we make our staff explain a new product, explain the new features, get the clients to subscribe. And we've made it very easy because people can actually do it from their homes based on existing credentials that they have, either through their credit card, debit card, or internet banking. But yet, up to date, I'm still I'm still not satisfied with the rate of penetration, and it's taking an awful lot of time. We have close to 15,000 debit cards, and this for me is a milestone to know that if someone can use a debit card, then it should be quite simple with the penetration of smartphones in Seychelles to make them use a mobile banking app. So I think in this environment, one thing which is something we need to think about is how do we educate the public? How do we get them to be interested? How do we create the excitement around the new products? And that is not only the role of a regulator. We've discussed with them. We know that they'll be nudging along the way, but we as commercial banks have to also play our roles. Second issue came around the telcos. I think it was mentioned at some point that telcos have an important role to play. So when we talk about a mobile banking app, there's certainly the question of how is the data, how do customers access this app, how much it costs in terms of data, do they all subscribe to data, can they do it from anywhere in Seychelles? So that is a second challenge, and we've been also seeing that we can maybe engage further with the telcos to see how a mobile banking app can be made freely accessible. I know in some countries they manage to make some apps freely accessible without any impact on data usage, and maybe the banks sometimes bear the cost of the data usage to encourage customers to subscribe. So sometimes, people will ask you, what would it cost to me in terms of data usage? And that becomes a mental block to subscribing to the product. So this is the second, I think, question we have to ask. How do we develop in this ecosystem a closer tie with the telcos and negotiate some data packages for the banks that make subscription to mobile banking apps an easier thing to do? And one final thing which I think is very important, and we've already engaged with central bank on that question, is today Seychelles cash is still king. And I was surprised, or I was not surprised when I listened to the video when people were talking about ATMs and ATMs and ATMs. This is not our strategy, but this is what is happening, and people are still very concentrated on the ATMs. We're trying to push them to e-commerce platforms, to POS terminals, but yet I see the long queues in my bank, which I tried to reduce, but at the same time, I think it can also be a disincentive at some point for people to continue to come and queue and do cash. And I think at some point, in terms of nudging strategies, we need to consider disincentive to cash. And this is something which is an ongoing debate with the regulator. Thank you.
Thank you. Very specific. Much appreciated. So James Jean, Head of Financial Inclusion and Market Conduct Division, Central Bank of Seychelles. Welcome.
Thank you, Doug. Good morning, everyone. I'd like to talk a little bit about fintech from the perspective of the central bank as a regulator. So our strategy, the new strategy which we've recently adopted, puts a lot of focus on enhancing financial inclusion through the use of financial technologies. So in implementing this vision, I think there are three key areas which we need to focus on. One is in terms of the access to financial services and products, usage, which is one of the main issues which we currently face in Seychelles when it comes to financial inclusion. And then the third, which is very important also, is in regards to ensuring that there are financial products and services that meets the needs of customers through, for example, proper pricing, user friendliness. As we heard earlier, for example, when it comes to SMEs, farmers, in terms of ensuring that there are products that meets their cash flow. So these are some of the main things which we need to focus on for us to achieve this objective of enhancing financial inclusion. So I'd like to drill down a little bit on some of the key issues which is affecting the financial sector. which we hope that through the introduction of fintech, some of these issues can be addressed. So I will not mention them all because Liz made a wonderful presentation earlier highlighting all of the key issues which the central bank is focused on. But I'd like to touch a little bit on one thing which is particularly important because there's a lot of debate recently surrounding SME access to finance, which we believe that in putting in place a strategy which targets SME access to credit, there's a lot of potential benefits which can be harnessed from that. For example, one of the things which we are currently working on is the credit information system. I think there's a lot of potential there to ensure that the credit information system, which is a form of financial technology in itself, allows the better access to credit through these technologies. For example, banks can enhance the way, the time frame taken for providing credit to SMEs by linking the core banking systems, credit assessment tools with our credit information system. So these are some of the things which us as regulators, we need to take into consideration when implementing changes to our credit information system and other initiatives, for example, the collateral registry, which can really assist in enhancing financial inclusion through the use of fintech. Secondly, another issue which is being faced is in terms of competition and innovation. There's a lot of debate as to how we can improve competition in the financial sector. And I think there's a lot of potential there for fintech to provide some solution to these problems. It is important that we put in place the necessary framework to allow the incumbents themselves to develop financial technology solutions so that they can compete amongst one another, possibly bringing down the cost of financial products and services. But also it is important that we also take into consideration the non-banks and other players that can compete with the commercial banks, the incumbent insurance companies, and other financial service providers. So that will not only lead to lowering the cost, but I believe it can also provide different, better tailored products and services which can really help towards enhancing financial inclusion. We also see fintech as an enabler to the digital economy vision which the government has embarked on. We think that without proper infrastructure, for example, when it comes to payment systems, innovative payment systems, the digital economy, we will not reap the full benefits of a digital economy, as the payment leg is one key element that will ensure that there's an end-to-end process which is facilitated through the use of technology. And I think fintech is one of the key enablers to a digital economy, which is very important to contribute towards economic development. So with that, I'll end my intervention. Thank you.
Excellent, thank you. So we've had the perspectives of a policymaker, partner, private sector, regulator, now payments infrastructure provider. So Franz Stander from BankSurf, he's a regional head for this part of Africa. Please, go ahead.
Thank you, Douglas, and thank you for the invite, Governor. Much appreciated. As Banks of Africa, we are the ACH, the Automated Clearinghouse for South Africa, and also appointed a regional operator for the SADC countries, for the 16 SADC countries. And we've been involved with the Seychelles for quite a number of years now, and with our focus being on the SADC countries, we see ourselves as thought leaders to discuss national payments modernization. So if we move a little bit away from the banks and the software systems they run on, we also have to look at the operators and the central banks, with the fintech companies punting to them. So what we've been doing for the last 3 years was extensive research into about 11 international countries with modernization of their national payment systems. India, Australia, Canada, UK, etc. We looked at the way they approached their strategies and to implement new systems. We've seen the good, the bad, and the ugly, what's happening out there. We saw the pressures they had from fintech providers. And if you, as of lately, talk about modernization, innovation, interoperability, well, that's what the fintech companies are all talking about. I'm not shooting anyone down, but it's as if everybody's all of a sudden expert. And we had some other speakers here as well today mentioning that, you know, you get your Bitcoin and experts out there. You go to the LinkedIn, and everybody's a Bitcoin expert and a DT expert. Although it's, you know, the terminology has only been on our lips for about 2 years. We've seen in the SADC countries the different approaches from the regulators and the industry players, or the stakeholders of the countries, and the way they progressed. In some of them, the central banks are not really involved in determining the way forward as far as technology is concerned. They purely play the part of the regulator. We must take our hats off for the Seychelles. We've seen the last 3-4 years how they've grown tremendously, how they participated, in fact, taking the lead on technologies. Although we recognize it's a small country, you might not have had all the banks with the deep pockets to drive the technology and the innovations. But I think as of recent of last year, the Bank Association also came to the party. They also address with the central bank initiatives to get the low value, high volume payments addressed. And that is what we've seen in the SADC countries, where if you talk about financial inclusion, you should literally talk about low value, high volumes. That's when you start talking to the real people on the ground. But it's no use you launch a solution and it's not cost effective for them. It's no use you launch a solution and 3 years down the line you have to pull it from the industry because the regulator was not involved. And we've seen some of those bad examples in the region where technology was deployed and it hurt the man in the street. So what we did then last year, we had a National Payments Modernization workshop here in the Seychelles. We literally, all the stakeholders participated. It was seen as a mutual. That means the banks, the telcos, everybody that's involved in payments in some sort of way are involved. And we could share the industry insights with them that we've learned. And hopefully all of us learned a few things and how we can approach the market differently. What's good for other countries are not necessarily good for Seychelles. We've also seen that every country has got their own challenges. Some of them you can attend to that in the short term, some of them will take you years to resolve. But where do you put that? How do you pace that to modernize your national payment system? How do you make sure that all the stakeholders are involved and they see it as a mutual? You can only do it by a leader. And in this case, central banks doing the job 100%. They're leading this thing. And we can see, you know, there are some countries, they have not progressed for the last 2 or 3 years. They implement maybe, say, a card switch. 2 years down the line, they have to switch it off again. There's no operator. So literally what we're doing with national payments modernization, we talk not only about the fintech solutions, we also talk about the operations of such. Once you install software or solution, who's going to operate that? When the solution provider walks away, is the operations in place to maintain that, to ensure there's SLAs in place, et cetera, et cetera. And when it comes down to the line, is it cost effective for the consumer? We can talk for days on fintech companies. With Banks of Africa, we are not a fintech company. We are an operator with experience in that, but we are familiar with fintech companies out there. And I would like to take discussions off line at the later stage. We have to be careful from a regulator view that international fintechs don't onboard and walk away tomorrow. And it's not to scare anyone off, but maybe if we talk about fintech regulation, like some central banks are looking at, having a board for fintech companies being represented to the regulator. That is maybe something we could look at in this country. Thank you.
Thank you very much. Appreciate it. Okay, so the Governor Abel this morning set out a series of reforms which are relevant to this discussion. The Minister of Finance noted the government has a leading role to play in driving adoption of digital financial services. And I think if you look at the new e-payment platform, which is being launched by the Revenue Commission and DICT, that's an important step in the right direction. So tweet length, it can be the longer tweet length, the 180 rather than 90, but as just a rough guideline, because you've already talked a little bit about incentives and reforms already, what would you highlight as the top, for you, the most effective or the initial priority reforms or incentives, thinking about the cashless question, that would have the greatest impact on harnessing fintech for inclusion in the Seychelles? Starting with Mark.
Thank you, Douglas. I believe in terms of incentives, when the government wants to prioritize fintech, the element of incentive needs to come from both ways, actually. It needs to come from the business and then the consumer perspective. So we need to incentivize both individuals, the business community, and then the consumers as well, to use and maximize the use of financial technologies in order to achieve the intent of what fintech actually really means. In terms of providing incentive for individuals, currently right now, most of the people, they do have, like we mentioned before, we do have bank accounts. But do we actually use bank accounts for all transactions that a bank account actually really do? For example, they use mainly for ATMs, but how about online banking, online transfers, going on trading as well? So we need to incentivize these people. And mostly nowadays, they do it by cash transaction. So we need to eliminate these cash transaction. And how do you incentivize people from using cash transaction? Is mainly in some countries, we put cash fees. So you will prevent people from using cash, but use more technology platform for them to effect payment. In terms of providing incentive for the business community, currently right now the government do have certain policies in place, for example, to encourage people to innovate. It depends on which particular sector, but if we want to drive fintech a bit more, we need to provide more incentive for the private sector in terms of give them subsidized loans, we give them startup capital, seed grants, we give them tax incentive for them to develop programs, projects, fintech-oriented, so that they will provide to more consumers out there. So once they have these products in place, it will broaden the spectrum. More business community will want to venture into fintech product, and more people will actually want to use those products. So the incentive needs to come from both ways, not only from the government, from the business side, or for the consumer side. It needs to both ways.
Thank you. Thank you. Very good. And yes, specific as possible. Thanks.
Thank you. So I'll again go back to the fintech frameworks. I'll refer to the last two pillars. First is on digitization of government payments, both in terms of G2P, government to person, and person to government payments. So this creates a nice segue of also having basic accounts in place. And then second thing on top of it is providing value-added services. And specific to Seychelles here again, providing positive incentives to save, increasing the propensity to save among the population. That's one. And very relevant again for Seychelles is again using digital platforms for advancing access to finance for MSMEs actually. Yeah.
Very good. Thank you. Very specific. Thanks. Bernard.
Yes. So we talked about incentives, and I'll go back to the point of disincentives to cash. So that's one thing that needs to be done. But bearing in mind, and I think we discussed that with Central Bank, that there are segments of the population that we don't want to hit with fees. So there are people who who have difficulty dealing with new electronic channels, and they are probably the aged people or the people who have some form of disability. So we won't be able to have a broad-based approach to fees that will impose to the general population. But basically what I mean is that there are segments that can easily do away with cash, which have to bear some kind of cost and start to do some opportunity costs around which channels are best for them. So I guess in that sense we have an opportunity, but also from a legal and regulatory perspective, we also mentioned that from an AML perspective, there's also some jurisdictions where cash limits have been put in place, and that is also a disincentive that you can't do bigger transactions using cash. There's a limit to what you can deal in cash, and that already creates that need to shift to the other channels. Thank you.
Thank you. Appreciate it. James.
Thank you. I think in terms of the reforms that are needed, we discussed a lot since this morning about the regulatory reform, providing a necessary legal framework for fintechs to develop. And we've touched a lot on things like sandboxes, providing a test and learn approach to the regulatory framework for enabling fintech development. Also, we mentioned the need for technology neutral regulations. So essentially, this will allow regulators to have regulatory frameworks that does not require to be amended when there are new innovations taking place, because as we well know, there's a lot of innovations coming from the market, and we cannot change regulations as and when these innovations are appearing. But I also think that regulations alone is not enough to ensure that there's development in fintech, which will lead to the benefits which we mentioned earlier in terms of financial inclusion. So there needs to be this holistic approach to undertaking reforms which will push the development of fintechs. And one of the key ones, I think, is in relation to what Marcus mentioned earlier, where the government also needs to look at incentives, for example, tax reforms, tax rebates, all of that can help towards innovation. The implementation of, for example, fintech labs, which will allow the fintechs to make use of resources which the government can put at the disposal of these technology firms. So all of that together is needed, and not only one set of reform or not only one authority will be able to ensure that fintech develops as it should for us to reap the benefits. So on that note also, I think it is important for the private sector also to have incentives. For example, the SCCI is one example in Seychelles, where we discuss a lot about putting in place these incubators when we were discussing the policy for coming up with this strategy for fintech. We had lengthy discussions as to how the SCCI also can play a role in that area, where they can also help in the development of fintech. So it is something that needs to happen across different supervisory authorities within the government. The different players, stakeholders, also have to play a role to drive reforms that will enable the development of fintech. And all of that needs to be done in coordination and close collaboration with one another. Thank you.
Great. So we've got some great inputs to the potential fintech strategy already. Very, very concrete ideas there. Thank you. So Franz, if you could finish us off on this topic. Thanks.
Yeah, just a short comment, and I just want to emphasize what Gisha indicated there on the value-added third-party apps. I think that can come actually from the banking sector and the telcos themselves. Good fair competition, closed-loop systems, although we always talk about interoperability, but that's always good fair competition in the domestic market. If you've got something like, for example, Airtel bill payments, etc., micro-insurance, micro loans, these are things that stimulate the industry also, but also taking cash away, driving the consumer to the digital arena.
All right. Very, very useful. Thank you. So, being focused on the financial sector, I think we have to take a minute to focus on risks. The reality is, fintech can exacerbate the usual risks that are present in the financial sector, and can even throw up some new around, for example, around use of data. So, bearing in mind that any responsible approach to fintech for financial inclusion would also have a very robust approach on mitigating risk, not preventing or avoiding it. That's impossible, but just mitigating it. So getting that balance between promoting innovation, facilitating investment innovation, and also mitigating risk is the key. So the question for the panel is, what should be keeping us awake at night, and what should we be doing so that we can sleep soundly? So just a couple of particular risks you think we should have in mind. So I'll follow the same order, so please.
Thank you. In terms of risk centers around fintech, it's quite broad actually. One element of risk which should be on top of the agenda in terms of data protection. Then data protection actually gives confidence for investors and as well as consumers to actually use those products. Then the second element is the infrastructure. We need to have the proper infrastructure in place for fintech to be more accessible to people, business communities, and the consumers, even for the government as well, in terms of internet, in terms of applications, mobile phones, iPads. All of these needs to be in place so that people can get easy access and they can use it to the maximum. Then you have the risk of the EML, which is something that the government is currently reviewing right now to have a robust system so that any EML or counterterrorism risk are well mitigated, and this will encompass not only fintech but other elements of financial transaction. So these three risks should be more pressing in terms of pushing the agenda of fintech forward, and all of these are on top of the agenda for the government, and we need to consider this in terms of promoting fintech.
Thank you. Excellent.
Thank you. Tweet length again. So first is on cybersecurity, a bottom-up approach to cybersecurity, looking at it from a financial inclusion standpoint. So putting the financial inclusion model, so starts from the customer, looking at the front-end applications, could be a mobile phone or a smartphone being used, and then platforms, and then the banking financial system linked to it. So there is a clear kind of mapping of the financial inclusion model, and then identifying vulnerabilities and coming up with mitigations, appropriate mitigations. So cybersecurity frameworks from a financial inclusion standpoint is the first risk. Second is on data privacy. So you can have the digital identity, national digital identity systems, but what is also important is to kind of tell for what financial services purposes can that digital identity be linked to, who can link the digital identity to, and for what reasons. So clearly defining that purview would be helpful. And secondly, from a private sector perspective also, we talk about alternative data, credit assessment models, so on and so forth. So how are fintech companies using data? What data is being used? The current incentive system is broken with disproportionate gains to fintech providers. So while they are leveraging the data, but the benefits of the data are again going to the providers actually. So there's a need for a mutually beneficial relationship between the provider and the customer on effectively utilizing the data and keeping the consent as the central mechanism for the data privacy aspects actually. So 2 things from my end. Thank you.
Thank you.
Yeah, so what I've seen as we go deeper into the digitalization of our services is that we are now more dependent on technology and communication networks. So there is always this risk of technology breakdown or problems that can come from outside the banks from the network point of view. I know it was mentioned that we're investing in a second submarine cable, and that creates an alternative, because the last time we had a cut in the submarine cable, it was a major disruption for my bank personally, because we tried to shift to the satellite network and it was kind of a very poor ban. So this dependency on technology and on network with the resource base that we have in Seychelles, and that I think touches the point of capability, not only from the development perspective, but also from the maintenance side and from the business continuity side. We do have some limitations, and we would need to go deeper into the BCP framework as we go deeper in technology, because the biggest risk that I face, well, I've identified that something that keeps me awake at night is that I'm encouraging thousands of customers to move to the electronic channels, but at the same time, if these fail, I know the next day they're going to say, give me my cash back. So let's go back to cash, because this is something which is more certain than these technological solutions that you're providing. So how do we make sure that we are 99.9999% online? This is the tricky question sometimes. Thank you.
Very, very good points. Business continuity concerns and even stability concerns to be taken into account. Thank you.
In terms of the risk in relation to fintech, I believe that one of the key risks is in terms of cyber security, especially in the case of Seychelles, where we are yet to get accustomed to a culture of cyber security. We are yet to develop the framework to ensure that there's proper cyber security resilience. A lot of work is being done currently. Cabinet has approved the policies in relation to that. Whilst they are there, we are yet to get accustomed to ensuring that there's the proper procedures in place to ensure that cybersecurity risks are mitigated, because this is particularly important when it comes to financial technologies, because we are opening up our systems to the world, which is not the case when you're operating in a manual environment, as we're mostly operating today. So I think cybersecurity risk is one that needs particular attention by the policymakers, regulators, the government, in ensuring that there's a proper framework in place that is coordinated at the national level. But it's also important for the financial technology providers of services, for the banks, for the insurance companies, and especially so for the non-banks, which is not used to putting in place cybersecurity procedures, frameworks to ensure that they mitigate these risks. So I think cybersecurity risk is one of the key elements which we need to focus on. Secondly, when it comes to AML, CFT, I think that also is one area, especially in the case of Seychelles, where we've been hit by this phenomenon of de-risking recently. So a lot of emphasis has to be put in ensuring that when we are developing fintech regulatory framework, that there is proper risk mitigating measures to ensure that from an AML or CFT perspective, that these risks are mitigated. So we've had a lot of impact based on the jurisdiction's reputation, which has caused the phenomenon of de-risking. So we need to ensure that in putting in place the framework for fintech, these concerns are taken into consideration and that proper measures are put in place. And I think it is important that these measures also has to be driven by the different competent authorities, because each of the authorities has a role to play in ensuring that these risks do not affect the jurisdiction. So I think these are some of the main risks which fintech poses, and we need to ensure that the strategy which we come up with addresses these issues through the proper policy measures to counter these risks. Thank you.
Thank you. So last word on risks.
Okay, again, short and sweet. One of the risks I can identify is the reputational damage that both the central bank and the commercial banks can occur with the launching of solutions too fast. If you look at other countries, 56 million people in other countries, yes, they can do some entrepreneurial stuff, they can launch that, they can make mistakes before you realize they can put it from a market, and they test with 1 million people. In Seychelles, unfortunately, with the population, we've got to be careful, we've got to look after everybody, and if we make a decision to move forward, rather have it in a sandbox, do the UAT properly with all the role players as a mutual effort. Other countries can easily launch an initiative as a fintech with one small bank and nobody to realize that until it's too late. So again, my suggestion would be do it as a mutual in this country. Thank you.
Okay, well, thank you very much. Those were very practical and I think highly relevant insights that have been shared. So I think, given the imminence of lunch, I'm not sure we have time for questions, but I would encourage you to, yes, exactly. There's lunch, there's coffee breaks. You know who they are, so please do talk to them over around the sessions. Just to say, please do warmly welcome the panel. That was extremely useful set of insights. Thank you. Thank you. So directions for lunch, does anyone got to announce that, or is it just fairly obvious? Thank you.
Thank you, panelists. Your input has surely sparked discussions on ways by which fintech can be used to enhance financial inclusion. This concludes our deliberations for our first session for today. For the participants who are unable to collect their registrations badges this morning, you are kindly invited to proceed to the registration desks to collect your badges. On this note, you are welcome to proceed to the restaurant at the main entrance of the hotel, where a buffet lunch is being served. We shall resume with our discussions in exactly 1 hour. Enjoy your lunch.